Hey folks, welcome. Welcome to Sunday Night Futures Live. This is Bob Desmond and it is 6 p.m. Eastern Standard Time and another Sunday. But this one is going to be wild. This is going to be a wild week, folks. Buckle up. Buckle up. So we're opening up with the futures. They just popped off the lows. They were down about a quarter percentage point at their lows, bouncing back a little bit. Let's take a quick peek at the VIX. VIX up quarter percentage point. That makes sense. So we had the passing this weekend of Supreme Court Justice Ruth Bader Ginsburg. Many prayers to her and her family. But the opportunists in our government, in our political system, are not going to let an opportunity go to waste. And this is going to be gasoline on a fire that has already been stoked. The flames are already burning. They're just adding more fuel to the fire. This is going to be a wild week. I can't even put it into words. Not even a wild week. Between now and Election Day, you're going to see the most nefarious acts by politicians occur. Let me say hello here as we wait for everything to settle down. Franklin, hello, sir. Evening, Bob. Refreshed after a quick getaway? Yeah, it was a nice weekend. I went up to the lake, just hung out. It was nice. It was nice. Joseph, hey there, Bob. Hello, Joseph. WG Shocker. Good evening, all. Larry. That's right, Cancerians. Yep. Go to the water to recharge. Absolutely. Upcoming week for gold. We're gonna look at that in a moment. I'm hoping good things here. Not that current. It's still early though. It's still very, very early. Sorry, folks. My phone is going off here. Okay, sorry. Okay, so gold down about a quarter percentage point. Trader Isaac, welcome back. Smash the like button. Yes, please. Thank you. Amigo, good afternoon. Gary, hello. Emilio, hello. Thanks, Pat. Hey, Pat, is your brother Paul on? Will, hello. I'll check it up on it for you, Pat. If you're referring to best stock charts, it usually only goes out to non-members. But did you get the week ahead commentary? But I'll check into it. I just got it a little while ago. Okay, let's do this. If Patrick's brother is out there, Paul, hello. And thank you for joining in. And let's get to it. All right, so gold still down on the session. Let's go back to the S&P 500, see where that's settling out. Not much has changed here. So we'll circle back. NASDAQ down slightly, marginally. I expected worse, to be honest with you. The Russell down, underperforming the other averages, the larger caps, no doubt. Let's check out the dollar. The dollar had broken out above resistance last week. Not much action. It's just essentially flat. I think that traders they don't know what to make of this. I'll give you my thoughts in a moment. Let's check out bonds. Looks like they're going to rally bonds, driving down yields. Yields broke out last week, folks. 10-year yield broke out last week on a weekly basis. Now, commodities are ripping. ripping. I'm talking in particular about ag. Forget about the 4-hour chart. Let's go to a weekly chart. Ripping. That's corn, oats, ripping, breaking out. It broke out on the week. Wheat, breaking out. Major breakout on wheat. Wheat's going up higher. So commodities are looking good. Oil down at current. Copper down, but still a bear. I mean, it's still rallying very strong. Let's go back to the 4-hour chart. Still very strong. We broke out new highs last week. We're doing a little bit of a fade, no big deal. Copper in rally mode. Palladium. It broke out back here on the 31st of August. Continuation move higher, a little bit of fade of late, but still in a bull run. So while others are going to be looking very pessimistically at the technology names, we're not in them. We've been out of them. We're looking more at the precious metal names, as we have been for quite some time, and at the beaten down cyclical names. They bounced back last week. They had a good week last week, whereas technology got hammered. Silver still remains in a big consolidation. Very tight consolidation, like a coiled spring. Bitcoin, it bounced back off the lows. It was lower earlier. But Bitcoin looking okay. We hit that 10,000 mark. We bounced. That was our price target. It bounced off of it. Now it looks as though Bitcoin is going up higher. I want to check back in with gold. Gold is weakening up. However, it's worth noting we were lower. We did break out last week. We were lower on the session. We have now recaptured, or we are now trading back above the breakout point. Gold needs to hold the support level at 1955. Has to hold it. Or else it's probably not going to be a good week for gold. Nat gas. It's dropped back down into trading ranges, not looking pretty here. But energy had a very good week last week, a very good week overall. But not so much for nat gas. All right, let's take in some comments. Eric, hello. You're welcome, Joseph. Yeah, we booked profits on steel, U.S. steel last week. We're going to look to get back in. I like that 8.24 level. We'll look to see if that gets retested. Blah, 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 blah. Stumbling on my words here. So let's do some chart requests. I want to blow through the chart requests. Then I want to come back to the futures. I want to see whether or not we close out the hour unchanged, higher, lower. So we'll come back to this. Yeah, I want to point out something about the VIX and S&P 500. I spoke about this with members over the weekend. And it's that you've had for the past couple of weeks, the VIX closed down on the week, 2 weeks in a row. But then you take a look at the S&P 500, because remember, the VIX usually trades inversely of the S&P 500. Not so fast. 3 weeks in a row down. So for the past 2 weeks, the VIX and the S&P 500 have traded in tandem. So while I've wanted to go into the week very, very bearish about Ruth Bader Ginsburg and the influence that it'll have over the elections, and I'll go into that in a moment, it doesn't appear at current that the market is reacting negatively to it. It could be that there's something out there that is causing optimism. Maybe it's the fact that you had VIX down and S&P 500 down. That's technically a bullish indicator, because if you see, like in the past couple of sell-offs, I've watched this. You've seen just before a sell-off in the market, you've seen VIX up, S&P 500 up, and then the market rolls over. Is the inverse occurring right now? I don't know, but I'm keeping it in the back of my mind that it is a possibility. So what I want to talk about is why we're here, in my own humble opinion, why we're here where we're at current with a completely dysfunctional society. I mean, I spent a lot of time this weekend, while yes, at the lake relaxing, I spent a lot of time reading. And if you go back to 2000 here, our debt has just skyrocketed. And note each scenario in which you've had a spike in debt. And each scenario, the common denominator that justified the Federal Reserve moving the balance sheet to even more and more levered situation, in danger of default and in danger of killing the US dollar and spiking inflation. The common denominator between all of these spikes is in one word: fear. Fear is what is enabling the federal government, whether you be Republican, Democrat, who cares? It doesn't matter. One's worse than the other. I'll keep my opinions to myself. You're not here for that. You're not here for that. But what the debt of the Federal Reserve has allowed the federal government to do is to enable horrible behavior, finance social welfare spending, even corporate welfare, allowing the financing of horrible behaviors on the part of government, to the point where the voters' vote just doesn't matter anymore. Think about the headlines that are coming out. This nut. We have our options. Pelosi doesn't rule out impeachment over Supreme Court pick. Who is she? You need high crimes and misdemeanors. What's the high crime and misdemeanor? What about the Constitution? It doesn't matter. In their minds, it doesn't matter. It's all about power. Secret Service intercepts highly toxic poison ricin mailed to the White House. This is on the 19th. You hardly hear anything about this. It probably happens quite often, but this is going on. This nut. AOC, Democrats should radicalize and fight following Ginsburg's death. What about the vote? What about the Constitution? It doesn't matter. As long as they have the Federal Reserve and Treasury working together to finance all their programs that they dream up, this socialist utopia, then this stuff will continue. Minneapolis. Voters line up to cast ballots as early voting begins in several states. Then you take a look at this. A big deal for voting. Pennsylvania relaxes mail-in ballot rules, will no longer match voters' signatures. What they're going to do is, if you're a poller, a pollster, whatever you are, you're working at the election board, you see a ballot, and the signature on file does not match the ballot. Normally, you take that ballot, you throw it away. It's no good. Now what they're going to do is they're going to mail the ballot back to the address. And they're going to request that they either amend, verify, re-enter their vote. This could take weeks. The goal here is to postpone the outcome of the election as long as possible. What is with this mail-in balloting? It's crazy. It's nuts. But they just don't care about our vote. It doesn't matter anymore. They have a disdain for us. So what's the fear? The current fear? COVID. Right? Look at the spike in debt on COVID. That's why they don't want the masks to come off. Look at Sweden. Sweden spared surge in virus cases, but many questions remain. Yeah, let's face it. They don't wear masks on trains. They don't wear masks. Their businesses are still open. They're open for business. They didn't lock down. Why haven't we learned from the Swedens of the world? I'll tell you, folks, this election is going to be a monster. And I don't want to get political, but look at, and these are just a few of the headlines. Look at what's going on here. This is going to be a horrible situation. I thought that we were going to rally into the election. With the death of Ruth Bader Ginsburg, my expectations have dropped dramatically. I'd expected the cyclicals, meaning the beaten down stocks, the cyclical names, energy for one, transports, which are doing very, very well, outperforming the S&P 500 at current, to do well. Not so much tech. I think the tech bubble has burst. You'll get your rallies back. I think they'll fade. And I've always contended that after the election, I don't know what's going to happen. More likely that we'll probably get a pullback in this market. So leading up to this election, do I want to have risk capital out there overly invested in this market? No. I want to be long of what's working. Gold miners did well last week. I want to be long of gold on a breakout. Silver, we own silver. We want to be long of things that are beaten down. So if we do get a major correction in the stock market, any pullback is an opportunity. ExxonMobil, Boeing, etc. Beaten down names like that. Even heck, Carnival Cruise Lines. Let them beat it down. And then we'll take advantage. Out of the ashes rises the phoenix type of attitude. Technology, not so much. I don't want to be a part of technology. I'm starting to sound like Fox News, Bob. Turn it off, man. It's not I'm not taking sides here. I'm blaming both sides. I'm not saying the Republicans are right here. In fact, I think the Republican Party is just an absolute disaster area. They're lemmings. I don't believe that they're the Republicans in the true sense of the word. I'm not partisan here. Pox in both of their houses. I think they're horrible. Absolutely horrible. What have the Republican parties done? What has the Republican Party done to push back on all of this nightmare and to support our rights as voters? It's disgusting. And I don't expect it to change. Anyway, so those are my thoughts. Let's talk support levels on the S&P 500. So far on the month, we have a bearish key reversal on the month. We have not taken out the lows of last month. I think that in all probability, we're coming down to the 3,229 mark on the S&P 500. If that fails, 2,972. If that fails, 2,808. And I want you to take note of this. Not so much Stokes, but take a look at the RSI. RSI has been putting in lower highs on the S&P 500. It peaked out back here in January of 2018. We've been making lower highs ever since here in August. August, we spiked up higher above resistance. At current, we have a breakdown, a breakout point failure. This is ominous. So watch the 59.40 mark on monthly chart S&P 500. Let's overlay trend lines, automated trend lines. You can see that TrendSpider is picking up support at 31.56 as well. I think it's validating my support level here. And we can draw a support level there. So what I want to do is this. I want to create an alert. It's not letting me do an alert. All right, that's embarrassing. All right, it's not letting me do alerts tonight for some reason. I must have a technical issue. I'm going to be setting up alerts at all of these support levels very, very soon. Ideally, I was going to do it tonight, but I'm not getting the functionality I need here. Let me go to the weekly chart. Yeah, they're down. All right, we'll come back to this. All right, let's go to member stock chart requests. I'm going to go through. I only have a few to go over from members. So if you want to throw some symbols in the chat box, we'll go to 7 o'clock. I need to go to members first, though. Oh, you guys, I just refreshed. I have a whole bunch more. AMD. Okay. All right, that changed. I have a whole bunch more to go over. All right, let's do this. From Nestor, AMD. I think I was supposed to do this for you the other day, and I forgot to do it. My apologies for that. Monthly chart, AMD. Horrible. An outside engulfing month, a very bearish setup. Weekly chart. And they had good earnings. Very bearish. Very, very bearish here on AMD. We broke out here the week of August the 24th. I believe this was the week of earnings. The week of August the 31st. And we have dropped back down below support. We have failed to hold this support level. So I think that we could head back down to this lower band of this triangle formation. Watch $67 per share. That marks support back in July, the week of July the 27th. How's seasonality? Going back 38 years. September is a horrible month for AMD. This is going back 38 years. So we have a lot of data here. October, not much better. November, though, we spike up to 61% positive outcomes on the month. So I would be very, very careful here. The technicals aren't looking good. Seasonally poor period of time. I would avoid these shares, and they could quite possibly be a short. Daily chart. Outside reversal day on Friday. We closed down below support. You got to be very, very careful here. Stokes are a bit overdone. Perhaps we'll get a pop in the next couple of trading days. But I think ultimately we're coming down here to this lower band of support. Let's call it, between $67 per share and $70 per share. So I would avoid these shares at current. The next chart up, SGMS. Scientific Games. We'll go, what a really nice weekly chart, man. We'll come back to the weekly chart. Beautiful. Beautiful. Very nice. Looking good. We have higher lows on Stokes. We are beginning to break out on monthly Stokes. Very, very positive. Breakout on RSI. Most importantly, though, what we're doing is we are, or have, I should say, broken out on a monthly basis. We've cleared some volume shelves, which are always good to see. That reduces the amount of overhead supply above, allows the shares to move up more smoothly, more quickly, with less volatility. Weekly chart. Very nice. We broke out above multiple resistance levels last week. I think that the play here, because you closed out the week last week above the third standard deviation Bollinger Band, and that's not going to last. I would set up an alert. Let's see if they're working now. Yes, they're up. Good. Touch, bounce. Weekly. Ugh. All right, we're going to keep this active for 2 weeks. I like this trade, but we're not going to chase it. We want to see support retested. Daily chart. Yeah, I don't think it's going to happen because you have resistance above. You can see this is the value of TrendSpider. For those folks not familiar with TrendSpider, 7-day free trial offer below. Use the discount code CON35. Use the link below in the video description area. Automated technical analysis. You can see that as we are moving up towards these resistance levels, you're seeing topping action. I'm not going to be a bit surprised if the markets close. Let's see what they're doing right now. If the markets close up tomorrow or open up tomorrow, yeah, we weakened up here on the S&P 500. We're breaking support on the S&P 500 4-hour basis. We're going to come back to that. You still may have enough momentum here to get up to these resistance levels. I would wait for the pullback and the retest, especially in light of market weakness at current. So I like the trade. We have an alert set. No rush here. A bit extended. Short term, longer term, thumbs up, looking good. SGMS. ITA, the next one. Defense had a very, very prominent role to play in our, I think it was a CPI. Was it the CPI? In short, there's a lot of buying on the part of government, and it's driving up raw metals, the price of raw metals higher by creating so many jets, ships, etc. So defense is getting a spike in terms of spending. I'm not seeing much happen here. We flashed a spinning top formation last week. That's a sign of indecision. We could pull back and do a retest of 158.78. A ton of volume, meaning resistance above, as noted by these volume shelves. So let's drill down to a shorter time frame to see whether or not there's a trade to be had here. Yeah, there's a trade to be had here. We are seeing, let's get rid of this. We are seeing higher lows get put in. Now the key is, do we get higher highs? We need to see a breakout and a close above last week's high of, was that 169.80? Needs to close above that mark. And ideally, we retest the following week. I don't see a rush to get involved here. Stokes is still declining. They're below 50. I don't like that. Rallies tend to fade, just like what you saw last week, the week before, and the week before that. You have Stokes declining, rallies fade. No breakout in RSI though, but guess what? We are not putting in lower lows any longer. We're trying to put in higher highs. So weekly chart firming up here. You need to see a breakout. I wouldn't buy it just yet. Daily chart. Let's see if this sways us anyway. No, it doesn't. We broke out above resistance on Thursday of last week. On Friday, bearish key reversal. We broke back down into this triangle formation. That means in all probability, we're going to retest this lower band. So I would avoid at current. ITA, let's go to a different view. I always use different charting software to validate what I'm looking at. It's not a short, but it's not a buy. It's got to break out. I would avoid right now. ABT. Abbott Labs. Biotech's had an amazing week last week. Abbott Labs monthly chart. We have an inside month so far. It's not a bad thing because we were overbought last month relative to this third standard deviation Bollinger Band. And we pulled back off the highs of the month. This month, we're off the lows of the month. Still down. No big deal, though. Weekly chart. Nice. Very, very nice. So here's our pullback. First week of the month. We retested support once, retested support twice, being last week. Very nice. Daily chart. Now we look for the setup. You have daily resistance above. I would buy the shares on a close above this upper band of resistance. I'll give you a price in a second. ABT. We'll keep it active for 5 days. And that's at around, let's call it 108 per share. But we want to see it close there, not trade above it. We want to see it close. So that's Abbott Labs looking good. Nice consolidation off of a overbought condition from last month, firming up. Looks like it's about to go higher. BE, Bloom Energy. Oh, I remember this one. Monster week last week. Let's go with the monthly view. This is our style. Multi-time frame analysis. We want to identify where a stock has been on a weekly and monthly basis to identify where it might be going. And in this case here, we broke out on Bloom Energy back in August. This month, we've pulled back. We retested not one support level, but two. Very, very good. And now we are just off the highs of the month. Weekly chart. A monster move last week. So what I want to see here is one of two things. One, a breakout. Well, let me do it on a weekly time frame. Let's do this. 17. Let's put it up a little bit higher. Let's make it 18. 18 bucks a share. And I'll put a touch on there. And the reason why I'm going to put a touch on there, I'll tell you in a moment. Keep it active for 10 days. Good to go. The reason why I kept touch on there is because what may happen is that we may rally, hit it, then pull back and retest this support level. And I would be interested in the trade on a retest. I love retests. So Bloom Energy looking very good here. And energy as a whole had a very good week last week. Cyclicals, they're doing very well. Technology, not so well. And here you go again. $18 a share. You close above that mark, I would open up a trade. Bloom looking very good. CVS. Who's this for? Mohammed. Okay. Emilio is BE. Okay, good. Got Emilio. Oh, Emilio, you have... Eric's got Hexo. All right, so we're going to do Hexo after CVS. Monthly view first, firming up nicely. The reason why I take the automated trend lines off is I don't want them to influence me. I like to put my annotations on first and then add the automated trend lines. So they're enhancing my analysis and not dictating it. So here's where we're at. We have a mini triangle going on here. Now let's overlay the trend lines. A little bit wider than our needs, so I'm going to take them off. Watch this. Higher lows forming on your Stokes. Add to that, RSI is validating the higher lows. Now all we need is a breakout. So while price is down, it's down on the month at current. We retested support, it bounced. I think that if we come back down and retest that support level, you can nibble, always nibble, especially with beating down names like this, because you don't know if they're going to break. It's still in a downtrend. The path of least resistance still remains to the downside. So you want to stay small at support. However, when these Stokes begin to break out, RSI begins to break out, I would be a buyer. I would be nibbling more. And once we start breaking out above these upper bands of resistance, aggressive buying begins. So I like the monthly chart here. Weekly chart. Weekly chart CVS, really nice week last week. Retested the lower band of monthly support. Bullish key reversal on them. A lot of buyers stepped in. Daily chart. What we'd like to see here on a daily basis is this. Think about where we closed on the week last week, or what the high of the week was last week. It was right at resistance. Let's go with the close. We'll go with the close. And you can see how where we closed on Friday at current is resistance, but it was support back here. What we'd like to see is it drift down in price. Put some space between share price and this resistance level. Nibble. Ideally, we retest the lower band again, and then we open up a position. It's an interesting recovery play. Make a note to myself about the monthly chart. Okay. So we'll keep this active for a while. That's CVS. It looks good. I would be cautious. It's a recovery play. Nibble, nibble, nibble. Hexo for Eric. Okay, you have a huge volume shelf here. A tug of war has been going on at this price point since all year, for the most part. Let's see if things are changing at a weekly level. Nice price action last week. In fact, we broke out above, I believe. Yeah, we did. Nice. We broke out last week. We have a higher low. We have a pivot point up here at $1.30 a share. So I think that this could be bought. But as always, nibble, buy on strength, add on strength. And once you get through this volume shelf, which is at, let's round it up to $1. Let's just call it $1. I would add more aggressively, and that sets you up for a nice rally up to $1.30 per share, which marks this pivot point. We break above $1.30, consolidate. That sets you up for a much longer term rally in the name. So it's an interesting setup. I like it. Fairly bullish on it. Daily chart, a bit extended here. Doesn't mean it can't go higher. Probably it will. But we're very close to the third standard deviation Bollinger Band. If we would have a big pullback, 73 cents a share looks very nice as a support level to add or open a position on Hexo. All right, let's go back. I haven't taken a look at comments. WG Shocker, yes, please, folks, smash the like button. I appreciate it very, very much. It helps me with the YouTube algorithms. Let's see. U.S. Steel. You want me to go over U.S. Steel, Oliver? We booked profits on U.S. Steel last week. Let's talk about the reason why first. And we'll talk about an entry point. All right, so steel, I mean, we were talking about $8.24 forever. What was that? Back here was the pivot point. Yep, that's it. $8.24 for weeks. We bought it, opened up a position in early July, consolidated, couldn't get through 8. I wanted to see not a close above 8, which was resistance, but I wanted to see a close above 8.24, which is even a higher level of resistance. Then I wanted to buy more. The problem was, as if this is a bad problem to have, the problem was we just surged on Thursday, a follow-through day on Friday, and we were trading above, well above, the third standard deviation Bollinger Band on Friday. And so I said, what am I doing here? Let's get out, and we'll wait for a retest of support. So I'm not even going to spend all that much time going over the... Why is sensitivity so wide here? There we go. This works. I don't want any sensitivity on this trade. I want in at least 8.24. That's going to get retested. Now, the reason why we like it is because nobody else does until last Thursday. Nobody else does. It's hated. And what I always say is I always look for a stock that's been in a downtrend. I've revisited from time to time, and I ask myself the simple question, has it stopped going down? When it stops going down, I set up my alerts, and we find good entry points. And the behaviors here are pretty sound. We bottomed out back in March. Now we're putting in higher lows. We've broken out above resistance. Are we out of the woods yet? No. Technically, from a monthly view, and it's funny, I just realized this. The high of last week marks the upper band of monthly resistance. So now I'm really happy I got out. So we are technically still in a bear market on U.S. steel. But once we begin to break out and break through, especially, what's the high here? Let's call it $11 per share. We close above it. Then you have higher lows and now higher highs, right? So this becomes very, very attractive. So that's why we like U.S. steel. We're right at resistance. We want to see a pullback, 8.24. And even if it pulled back below that mark, I would be in there. I'd be buying it up. Because the logic is that I think that the last time you saw U.S. steel run, along with other commodity prices, was when China was still building out. They were hoarding steel, copper, etc. And you're going to see the same with India, Vietnam, Malaysia, Indonesia, Brazil, the United States. Why? Manufacturing, whether by voluntary decision or by mandate by the governments, they're going to leave China. China is screwed. So those countries are going to have to build out their infrastructure. The United States, our infrastructure, while it's not third world, it's pretty darn close in certain areas. So we would need to have manufacturing come back to the old Rust Belt. We would need to rebuild the infrastructure, rebuild factories. It's going to take a lot of money, a lot of raw materials, but we need to do it. So that's why I believe that you're going to see U.S. steel, besides the fact inflation is here, not coming, it is here. It's going to head up higher, dollar lower, steel goes higher. That's the logic. We're sticking to it. And it's worked out for us. Franklin, MITK? Okay. Very nice. We're down on the month, but that doesn't bother me at all. What I like is that what we've done here, let's pick up. I was going to go to the automated trend lines first and be late. Damn. Knew it. So this is what's pretty. I always like retest of breakout points. So we broke out in August. Now this month, what we did is we pulled back. We did a retest. So think about the psychology that's going on here. For months upon months, we've been trying to find support. Here, we tried to break out. We were rejected. They tried to break it out above resistance again back here in July. Finally, we're able to in August. So this, psychologically, is for traders like me with OCD, obsessive compulsive disorder. What was resistance needs to get retested. We need to touch it, make sure that now it's going to act as support. That's what happened earlier this month, weekly chart, probably last week. Actually, the week before last. 2 times. No, that was August. So we pulled back here, first week of September, attempted to follow through to the upside last week, a little bit of a fade. I want to, before I'm done here, I just go on here. I just want to go back to the markets. We're back off the lows. Let's see what VIX is doing. VIX continues to gain strength. No breakout yet on the futures. What's the NASDAQ doing? Off of its lows. Okay. Dollar, that was flat earlier. It remains flat. I'm very surprised that we're not seeing more volatility right now. Okay. Copper consolidating. All right, back to METAC. We could do one of two things. If the market comes under more pressure, we could just trade within this trading range for quite some time, several weeks. And then ultimately you'd want to buy it on a breakout. It's a bit too extended here for me, so I wouldn't be a buyer at current. Daily chart. But let's say I had to. I had to make the trade. When would I do it? All right, so I would do it. There are three ways to open and add to this position. One, on a pullback to $12.20 per share. Two is to buy the breakout above this upper band of resistance here. I would not buy the breakout. What I would do is I would buy the retest. So if we broke out, pulled back, retested, and we flashed a bullish key reversal bar, I'd be a buyer. Then I would add to that position more aggressively on a breakout above this upper band of resistance. And we have a volume shelf here, not a big one, but ideally a close above $12.87 per share. That's a lot I just threw out there. I'm just going to print this and share it. So that's METAC, Franklin. Let's see if we have any trend lines. I think the trend lines, the automated trend lines, are just validating what I'm saying here. So, look at this. Almost perfect. Meaning they're almost perfect. Yeah, China-U.S. tensions, very, very big issue. They do not want to see him back in office. Their debt to GDP is worse than ours. All right. CAPR for Mark. CAPR. All right, let's go to a weekly chart, a monthly chart. Ooh, very nice. See these Bollinger Bands? Very, very tight Bollinger Bands. So you could get a Bollinger Band squeeze fairly soon. You are seeing higher lows. See what the automated trend lines have to say. So on a breakout above this upper band of resistance, they're saying that we're going to have resistance at around $5.56. But that's where we closed. Excuse me, I read the wrong number. $8.65. I was looking at the closing price. My bad. So not a bad risk-reward trade here on a monthly breakout above resistance. All right, so they're trying to break it out. It was rejected. You have a big volume shelf above here. See what the daily chart looks like. I think what you need to do here is we have a daily breakout, but it's got to retest this support level one or two more times. Because the problem is that immediately above, you have a lot of resistance. So could you buy it? Sure. I would want to see it hold the support level one or two more times. I think it's going to go up higher. Your Stokes putting in higher lows, RSI higher lows. So it looks good. Just beware. A lot of overhead supply up here as noted by volume by price. Hey, Paul. How you doing, brother? PRTS, you got it. And William, yes, please smash the like button, everyone, please. U.S. Auto Parts, this should be doing well. Okay, Paul. Yeah, it's been on fire in Fuego, and it's probably going to head up higher because people are keeping their cars longer, and I'm assuming that this is a auto parts company. It sounds like it by name. So this, if you would have asked me this question last month or the month before, I would have said avoid like the plague. Because we were trading above the third standard deviation Bollinger Band monthly basis. The froth had to come off. The froth has come off. And the market's saying you have support here at $9.51 because it was resistance back here. Buyers step in. So we know where we have support. You should have another support level here at $11.65 the share. Now let's drill down. Let's look for setups. All right. Weekly chart. Where are my Stokes? I don't like the Stokes. Stokes are down below 50. And rallies tend to fade. You didn't see that last week. It was a strong week. It bucked the trend. So if they spike it this week, I would not go chasing it. I would wait for this support level to get hit. Okay, so it's a weekly chart. We'll keep it active for 10 days. You know what? Since you're Pat's brother, 11 days. So I would wait for the pullback and a retest here. At least you know if you're looking to enter this trade, where to put your stop loss right below. And if it does fail to hold the support level, well, you have another support level right down here, which is very attractive to enter. But beware of these Stokes, please. Please beware. As they continue to diminish, you should expect that as we rally, you're probably going to get some selling into strength. All right, so I'm surprised that we closed so strong last week. Let's take a look at the daily chart. A good, I got to tell you, it's looking good here. Stokes are hooking up on a daily basis. RSI is hooking up. You're starting to break out on your Stokes. I still think you're going to get a pullback here to support. And that's at 11.60 per share. And then I would add more up here. Stay small on the entry. Be a bit more aggressive on the breakout. And we'll keep this active for 5 days. That's how I would play it. I'll share this with you. I don't know if you have TrendSpider or not. As a matter of fact, I want to do seasonality for you too here, Paul. I posted that chart in the chat box. Seasonality, let's talk about that for a moment. We have seasonality data going back 14 years, so it's respectable. We're heading into a seasonally rough period of time. It picks back up in December and into January. But just be careful here. Seasonally rough period of time. But times are different right now. I don't like to say it's different this time, but times are different because people are just keeping their cars longer because we're in recession, depression. Thank you, Paul. Thanks for joining, pal. Oh, you listen to on your walks? That's great. Thank you for that. All right, I'm going to take, I'll do Square. That'll be the last one for tonight. Oh, for Jason, CLDR, Square and CLDR, we'll wrap it up. And we'll circle back. We'll take a quick look at the futures. Oh, Cloudera. I haven't looked at this one in a long time. Avoid it. Outside reversal bar. We've broken down below support. This is setting up as a short. If we close down below 1060 and we open up a new tick down in October to new monthly low on a close below 1060 in September, it's a short. Weekly chart. A lot of selling going on up here. Big volume shelf. It's got a whole 1060. You know what? Actually, let's revise that. Let's amend it. Let's make it 1050 per share. 1048. Your Stokes are horrible. If you're a short, are you looking to short this out of curiosity, Jason? Lower highs on Stokes. Stokes are weak and getting weaker. RSI weak and getting weaker. Good man. Jason said yes. He's looking to short. All right, so they bounced it off of support on Friday. Beware one thing here. Watch your Stokes. They may set this up for a counter trend rally, just like you saw back here. And if we rally up and into $11.60 the share, you could look to enter to the short side with a stop loss just above, if we close above that resistance level. But then I would lean in very aggressively on a break below, what did I say, 1060 per share? Yeah, 1060 per share. Or 1050 per share, sorry. So that's Cloudera. Square. Yeah, the air's coming out of these names. You know, I look at these stocks that are trading above their third standard deviation Bollinger Bands, and it's like money in the bank to short. All you got to do is wait for sentiment to wane, and now the air's coming out. So I wouldn't. Let me refrain from saying don't buy it yet. Maybe there is a reason to buy it. So let's drill down in time. So the monthly chart now looking good. Weekly chart now looking good. They tried to rally it. It was rejected. This 159.74 mark is really horrible resistance above, to the point where if they tried to rally it again and it hit 159.74, I would think about shorting it and use a very, very tight stop loss order, because if we closed above 159.75, then I would look for a retest and it could quite possibly become a long. Right now, though, it doesn't look probable. So a rejection at that level yet again for the umpteenth time. Stokes are rolling over. It could become a short on a break below this lower band of support at around 180, let's call it 187.50 per share. Daily chart, and I don't mean as short as it's going to zero, as a scalp. Daily chart looks a little bit more optimistic. They may retest this support level at 141 per share. What I'd be looking for on this trade are these Stokes. They were hooking up. They're now pulling back. And you might be saying that's a horrible thing. It's terrible. Not really. Because if they begin to hook up, that's a higher low. So, and you're already seeing it, in fact, on RSI. You have a W formation. Although we took out the prior low on RSI, we have, this is what you call an undercut double bottom. We took out the low, bounced back, broke out. Now we're seeing a retest of the pivot point on RSI. It looks as though we may pull back further here, but this support level may just hold and we may get another run at resistance. But I'd be a seller at that resistance level. And I would look to re-enter the trade if we manage to recapture support, currently resistance. I would look to re-enter, but I would sell into that rally, book profits, and that's how I would trade it. You're welcome, Jason. You're welcome, WG. Before I sign off, let's take a quick peek at how the futures have settled down. It's been an hour. Not much happening here. We're holding support on the S&Ps. On the NASDAQ 100, we're seeing the same. The dollar is key. And the dollar is doing nothing. Gold, holding support, hasn't done much since the last time I spoke about it. Gold should be ripping right now. Why it's not, I have no idea. You have a flat dollar. Gold should be ripping on fear. Speaking of fear, let's check out VIX. The VIX is faded. We were higher. We're still up, but we're at resistance. Chuck, Franklin, have a great night. Everybody have a great night. Thanks for joining in. And if anything happens very, very aggressively overnight, if tomorrow we wake up, we see futures that are red hot, dropping or skyrocketing, I'll do a swing trading today early tomorrow morning. So if you're not currently a follower on YouTube, click the subscribe button and the bell button. And if you want to get alerted on Thursday nights and Sunday nights of when I go live, there's a link below. Enter your email address to get alerted 15 minutes to a half hour prior to me going live. And everybody have a profitable trading week and a great evening. Be well. Thanks for joining. Hit the like button, please. Thank you. Nestor, good night, buddy. Oliver, good night.